We believe that wealth is a journey, and that this is your jumpstart to trading success. Hello everyone, and welcome to another edition of the Trader's Mindchat Show, where we believe that wealth is a journey and that this is your jumpstart to trading success. I'm Mike.
And I'm Melissa. We have an amazing show planned for you guys today. We have guest Adam Sarhan here today. He's going to be joining us in a little bit. He is the founder and CEO of FindLeadingStocks.com, as well as 50 Park Investments. He's also the co-founder of GrowthStockMentor.com. He's a Forbes contributor, and you actually worked together for a while there.
Yes, we did. Back in the days of Chart Your Trade. That was pretty fun.
Yeah, so we're so happy to have him on the show today, and that's going to lead us into our discussion this morning about, how to take control of your money and win, and also to take the fear out of trading.
Yes.
So before we get into the 3 steps, I think a lot of us, when we have watched a movie or a ball game together, there's different perspectives. Like, nobody has the same story about what they experienced. I think the same can be said for the market, right?
Yeah, I think that's a great point. So the market is just data, right? Like, it's just data. All these, the price moving this way, that way, up, down, left, right, sideways, it's all just data, and depending upon what your position is in the market, you'll feel one way or another way, or what your strategy is, you might feel one way or another way, but there's nothing inherent in the data or what's being presented by the market that is good or bad. It's we assign that, and we have emotions tied to those actions because where we want something to happen. It's not where the market knows us personally, and it's like, oh, we're going to slam your account today. No, it has absolutely nothing to do with that. It's just
unfriend you, or
it's not gonna bam unsubscribe. No, it's completely unbiased. It's just information, and if we look at it that way, then we can take a step back too and see it for what it is, just a objective decision making.
But what do you think when people start thinking that the market is rigged? Like, do you think that comes to inexperience, or that just comes to just having
well, let's say it is rigged. Let's say it is rigged, right? So let's say that you have, you've got big banks, you have governments stepping in, intervening, news releases getting put out at opportune times to make the market move this way or that way. So from that perspective, the market's rigged, but everybody's playing under the same rules, right? And the only thing that for us is we have 2 decisions to make, right? Like, we could either press the buy button or the sell button, or a third one where we could just sit on our hands and wait. So that decision is always in our hands. So the market is not rigged in the respect that somebody is going into your account and forcing you to make this decision or that decision. We need to come up with a strategy where we see the data, right? Objective data. And after playing the game many, many, many times, we can come out ahead. It's very similar to how a casino might operate, right? Where that they don't care who walks in the door, but they know that over how many thousands of people that are playing hands or whatever the card game is, they at the end of the night, they're going to walk away a winner. It doesn't matter if you hit the jackpot or if somebody else hits the jackpot. Big numbers, they know that they've got the edge. And so that's what the market allows us to do, create that edge for ourselves.
Oh, very interesting. So when you say create that edge, what are some ways that you can create that edge for yourself so that your money can work for you?
Yeah, you always want to have asymmetrical reward to risk, meaning like if you put in $1, you want to get $2 back. Well, like the example that everybody uses is like flipping a coin, right? Mm-hmm. Like if you got paid $2 every time that it landed on heads, and you would lose $1 every time that it landed on tails, you would flip that coin all day long, right?
Oh yeah, give me that coin.
Yeah, right. Like unless if it's like a double-sided coin with like tails, like yeah, right, then maybe it wouldn't work. But the idea is, that you get paid more when you win and you lose a small amount, and you keep on playing that game over and over, and with 50-50 odds, you can come out ahead. So what I like to do is I like to aim for at least a 3-to-1 reward to risk, meaning that if I put in $1, I'm hoping to get 3 back. It doesn't mean that I always get 3 back, but that's the target. So under those circumstances, I could win just 1 out of every 4 times and break even. So I'm putting the odds in my favor by doing that. Then you could also construct a system to help you win more, or put the odds more in your favor. So how can you do that? You can gauge the overall environment. Is the overall environment conducive to your system winning or not winning? Some market conditions are better for some systems, some aren't for others. No system wins 100% of the time.
I know, just thinking about the Hunger Games, may the odds be forever in your favor. Yeah. I guess that's how you should go into it, is that you are setting these odds in your favor so that you will statistically have a better chance of winning each time. I think you said it's not just putting all your eggs in one basket, it is diversifying your account so that you have more of a probability of winning.
Yeah, that's right. And Katniss had Hey Mitch, and if she didn't, she'd probably
drunken older guy.
Drunken older guy, but somebody that made it through.
Yes.
Right? And you know what? If she didn't have that guide, she there probably wouldn't have been Hunger Games 2 and 3, right? Because she wouldn't have made it through. So if more newer traders looked at it that way, that they actually do need somebody to go and show them the steps versus cracking open a book, watching a YouTube video here or there, and expecting to have massive success, unfortunately, that's not how it works. And that's the same path that I followed and tripped over my face for the first 10 years of trading. Trying to do all this by myself before getting my own version of Hey Mitch, which ended up being the meetups back in the day.
Yeah, tell a little bit about that. If people want to look for finding their guide or finding their mentor, how did you even find IBD? Did you just fall upon it? Was it that you had heard about them?
One of my coworkers back in the day, John, hopefully, John, you're watching this. John retired in France. But yeah, he told me, you should give and back then, I was ready to hang up the market and not think about it again. But he's like, you know what, you're in middle management now, you should start to learn to invest in yourself. And I told him my whole backstory, how got kicked around and lost and everything. And he's like, well, you should read this. And the book that he actually handed me was that green one right there on the shelf, How to Make Money in Stocks by Bill O'Neill. So I read that. Every word in it made complete sense to me, and so I started to try to do this myself, and I was failing again. But I also started to read the newspaper they came up with, Investors Business Daily, and in there I saw that there were meetups all around the country, just people that were all trading similarly, and you could get together with other people, regular people, and help one another and learn. So I go to this thing, and the first meeting is run by a hedge fund manager, a couple of full-time traders, and there's a bunch of other people sitting in the audience, and new people that have been doing it for a while. And so I went there. 3-hour meeting on a Wednesday night. And I was completely blown away when I went there the first time. Just the level of presentation and the care that people were giving, it was the same level of presentations that I was getting while I was working on my MBA.
Wow.
Yeah, floored by that. So I went again and again and again, and I went for a whole year. And then after a year, I'm like, wow, I've learned a lot from you guys. Here's what I've been doing on my own. Well, what do you think? And they were so floored by what I was doing. They wanted to adopt some of what I was doing and start to use it. And they also invited me to be a leader in the group. So I started to present.
So you became the Hey Mitch for other people then.
Yeah, and you know what? Like I was just telling a few people in the Traders Mindchat room too that this was like one of the things that really helped my learning curve like start to take off. And the reason why is because when you're trying to learn something on your own and you're learning from others, like yes, you are learning. You're learning faster if you're around others. But if you are also going that extra step to help somebody else, to help teach them, it helps reinforce it in different ways for you, and it forces you to see things from different perspectives that you may not have considered before. So you learn at a much deeper level, and that accelerated my learning too. And I feel that like it's possible that I would have still succeeded if I had not taken that additional step to teach. But for me, like it's something that definitely accelerated.
No, I love this, especially since this is something we spoke about the last episode about having that sense of community. I know this was when he did the IBD meetup. It was before COVID and the COVID pandemic, but there's different opportunities virtually for you to connect with other people who are trading in the same system that you are, whether it's IBD or whatever the case is.
Yeah, like thank God we're in an environment now where we could just do this from home or connect to people all over the world. It's great.
It really is. And I think that the Traders Mindchat room is a great way for people, a global platform where people are able to connect with each other, share ideas of what they're doing in the room so that they can kind of have that sense of community. Even if you're not right next to the person, it's like you have a friend, like someone that, you have a similar interest and you're able to help each other out. So I think that that's a great way to connect. Mm-hmm. So I think that what we touched upon about is finding a guide, which I think is a great way to help you get your money to work faster for you so that you win each time, is so that you're working with somebody who's already been there, who's already struggled, had their losses, and figured out a plan that works for them. Mm-hmm. But I think, what is another way to take the fear out of trading? Are there any exercises that you have done or ways that you have been able to do that in the past?
Well, a lot of it's in the Mara Mindshift guide. One of the main ideas, or one of the reasons why I decided to write that book, was to help people gain more clarity, more awareness of their beliefs. A struggle that so many of us face is that so much of our actions are based on beliefs that we're unaware of, right? So, like if we were just completely consciously aware of everything at every moment, your head would explode, right? Like you're not consciously thinking of like the blood circulating through your left ear at this very moment. Maybe you are now because I mentioned it, but you're not thinking about things like that, right? Like you're not thinking of like the air that you're breathing right now. You're not thinking of like the sound of the car that just drove down the street, but all those things are being processed and they're being filtered, right? So we're really only consciously aware of just a very small fraction, like 1% or less than 1%. I forget exactly what the figure is, but something like that, and everything else is in the background. But as far as beliefs go, if we are if most of our unconscious mind is what's driving us to make decisions, and we have a limiting belief about trading or about money, then that's going to keep on playing itself out if we're unaware of it. A good example, one from the book, was about somebody that I had, a bodybuilder that I was coaching to help trade. I think he had two brothers, and he was working well with his father, and his father had 3 jobs while they were growing up and money was tight. And so what he wanted to do, or what his father wanted to instill into him and to his other sons, that you need to work hard for money, right? You could have whatever you want in life, but you've got to work hard for it, son. You have to work hard for money, right? And that money doesn't come easily. So all that stuff is being ingrained into him as a small child. Idolizes his dad. Then later on, he goes out and he tries to trade. And at first, trading is challenging, and like he's starting to make some progress, and then he stops making progress, and then he would make some more progress, and then he would just be one of these boom and bust traders. And it's like, well, why? The reason why ended up being because he had this limiting belief tied to money, and that you need to work hard for it. The thing with trading is that, like, as you continue to progress, the game actually gets easier, right? Because it's just repetition. You're doing the same thing over and over and over again. You build a system that you're just executing over and over again. Eventually, that's going to become easy. So if money is coming easier, if trades are coming easier, then something must be wrong with his old belief set, right? You've got to work hard for this. So self-sabotage.
But I'm sure, like, he never even thought about questioning his beliefs at the time. Like, he probably assumed it was his process, or something just wasn't working correctly, or maybe he was just stressed out.
All of that. So, and I talk about this in the book too, but the strategy that actually went versus, like, just telling them straight out, like, maybe you've got some bad money beliefs, like, tied to, well, your upbringing. It was more like, well, let's go another route. And I started asking him about his bodybuilding, and asking him, like, well, what could you deadlift, right? And I think that it was something like, oh, like I could deadlift like 400 kilos or something crazy like that. It's just like in pounds, that's like, I think that's like 1,000 pounds. I'm just like, Jesus Christ. But
I can't even imagine. I can do like 10 pounds.
And just like,
I'm
like, that's insane. Like, how many could you do? And he's like, oh, I could just do that for one. But then it's like, all right, well, what were you able to lift like a year ago? He's like, oh, a year ago, like I was only able to do 300. Like, that's really strong progress, right? And I'm like, yeah, man. Like, so, are you no longer worthy of lifting the 300 pounds? And he's like, what are you talking about? Like, I work every day. Like, that's why. And that's not stopping anytime soon. Like, I work hard. And I'm like, okay, so you worked hard and it got easier, right? So couldn't the same thing be said of trading, right? Like, you worked hard and it got easier, and that's when the light bulb went off, and
trading turned around, right?
Yes, trading turned around, and now he's had a lot of success since then.
I love it, and especially that he came to that realization on his own. Yeah. So it wasn't like you just told him, this is your poor money belief, and you're going to have to change this. He had to realize that himself.
So many times people think that answers are the answer. Answers are not the answer. Questions are the answer. Like, you unlock doors by asking the right set of questions.
And I think this is a great example of fear, too. Like, when you start feeling those butterflies, if you're about to go stand in front of a room and you're going to be talking, in front of an audience, if you're afraid or you don't know what the hell you're doing, I think that when you start questioning, why am I feeling this way? Why am I feeling so nervous and so afraid about this? What is the worst that can happen? I think when you really start soul searching and you start figuring out, asking those questions of yourself, you'll start realizing that a lot of those fears are trivial, that it's just your subconscious trying to protect you. But is not doing the thing going to protect you? You have to put yourself out there, and each time will get easier and easier, so that after a while, doing something like this is going to feel like second nature to yourself, or you're just going to keep getting better.
Yeah, putting in reps is an important thing. Yeah, it applies to something like this, putting out videos and podcasts and stuff. It applies to trading too. Putting in more reps. This is another conversation that I was having with somebody in the room. Like, the more reps that you put in, like, the more that you're going to have the discipline to stick with a system. Put in more reps with YouTube, with trading, with the gym, whatever it is. Like, those reps, like, you're building mental muscles.
I love it. And I think that when we started this conversation, we were talking about different perspectives. So people come into trading from different places, whether, you've already had these type of beliefs, or poor money beliefs, or strong money beliefs. But everybody comes in a certain place, but it's you can still get to that same end result, no matter where you end up coming in, correct?
Yeah.
So this is a great way that we're going to lead into Adam, who's going to be joining us today. He's going to help us find leading stocks in our trading. And just stay tuned, and he'll be joining us after this word from our sponsor.
The sponsor of today's show is FindLeadingStocks.com.
My friend and market expert, Adam Sarhan, creates a weekly leading stocks report, which includes a model portfolio with exact entry and exit signals, 10 new setups each week, and the top 20 strongest stocks in the market. Check it out for yourself at findleadingstocks.com and use coupon code MARA to save 10% off of your order. Welcome everybody to the Traders Mindchat Show. Today we have a very special guest with us today. His name is Adam Sarhan. Adam and I have been friends now for close to a decade, and his resume is so long that I actually have a printout here to go through it all. And well, we also have my lovely co-host joining us today, Melissa.
Hey, Melissa.
Hi, everyone. How are you?
So
great to finally meet you, Adam, virtually. This is amazing.
Likewise, after all these years.
All these years. So great to have you.
Thank you for coming, and thank you for being here.
So Melissa's going to be running the Q&A. Brief history on Adam. So Adam is the founder and CEO of FindLeadingStocks.com, 50 Park Investments, and is the co-founder of GrowthStockMentor.com. He is a Forbes contributor and is also the host of SmartMoneyCircle.com, the podcast where he interviews large money managers all over 100 million and CEOs for timeless investing advice. Adam and I also worked together back in the day on ChartYourTrade.com, and fantastic, wonderful person, and so thrilled to have Adam on. Adam, thanks for being here.
Mike, thank you kindly for the warm introduction, and all of our years of friendship means the world to me. You know, you are one of my favorite people in this universe. And it's a quick side story. I was in New York one time coming to speak, and Melissa, I don't know if you know this story or not, but Mike came to my rescue. I had a cold or something like this. This was years ago. And I needed some medicine. So I asked him, I was like, hey, Mike, can you bring me some Advil, cold and sinus, or Tylenol, whatever it was. Anyway, he showed up, gave me the medicine. I couldn't have thanked him enough. I went on stage, did my thing, and it was a fantastic hit, but I owe it all to him. So, and countless other blessings he sent my way since. So lots of warm, loving feelings towards you. Forever in your debt. Let's put it that way.
Awesome, man. Thank you. I can't believe that you still remember that story. That's incredible. I remember the story back when we were trying to find the meetup too, and we were just like, I think we got lost. We almost went to the Bronx trying to find the IBD meetup presentation.
Yeah, we jumped on the train, we ate, and then we just started talking, and next thing you know, we blinked our eyes, and we were all the way, we were past Harlem. Yeah, you're right. We were almost in the Bronx.
Oh my God. So, I have the first question for you, and your story, your backstory is pretty fascinating too. So the first question is your first firm you actually began in your dorm room. Can you tell us a little bit about that experience?
Sure. So for those of you that don't know, my name is Adam Sarhan. Mike, thank you for the very warm introduction. I'm a self-made student of markets. And what that means in very layman terms is I love to learn about stocks and other capital markets. So I didn't go to Harvard or Yale or go work at a big bank. I've got the untraditional route. I'm self-made and self-taught. So I came across the underlying knowledge of I know I don't know, like Aristotle and Socrates used to say way back when. That was, one of the big pieces of wisdom that was passed down is if you think you know it all, you don't know anything. I knew by definition I don't know. So I had one of two choices: either continue not knowing or learn. I chose the latter, to learn. So I started trading stocks when I was in high school, a little bit younger actually. I've always been fascinated with Wall Street, from New York originally, born and raised, and moved down to Florida 20 plus years ago and been back and forth since, and then been all over. Anyway, so my fascination with markets was, I started in the 90s and I saw the dot-com bubble. I saw 97, 98, 99. I was trading back then, not knowing what I was doing, but I was just in love with the idea that you can make money from the market. And I've made every amateur mistake you can possibly make, and then some, and then some, and then some. But the good news is I've persevered and I've learned from them. So back when I was in undergrad, I was trading a little bit, but it wasn't really until grad school when I really sunk my teeth into the understanding that anyone can do this. So as a background, I'm short, I'm 5'6". So if I were to go play basketball against Michael Jordan or Shaquille O'Neal, I don't have a chance and to win. And it's physically impossible. But what attracted me to this business is that anybody can play, anybody can compete, and anybody can win. It all depends on what they put in their brain. So that to me was a huge opportunity, because physically, I'm not going to go play for competitive sports, and I'm not musically inclined. I was talking to someone else about that earlier. I'm tone deaf, and I'm lucky if I can, sing the twinkle. I know the words of Twinkle Twinkle, Little Star. So it left me with very little options. So I fell in love with markets. Intellectually, it was stimulating. It's the best puzzle in the world, and it's always something new. You've got the excitement, you've got the challenge, and it's not trite. It doesn't get old, so on and so forth. So I just really fell in love with it at a very, very young age. And I knew that I didn't know, so I had to learn. So when you start learning and you're self-taught, this is all, by the way, before the internet was really big, before Google existed, before Facebook existed, Twitter existed. None of this stuff happened. Back in the 90s, it wasn't around. AOL was around, but that was about it. So I said, okay, I have to go to the bookstore. So I went to the bookstores. I started listening to radio shows at the time were big. There were no podcasts. YouTube didn't exist, so on and so forth. So I came across fundamental analysis, which is basically the understanding that you want to study the company. And you can study the earnings, the sales, you can go on and on with all these different fundamental metrics that help the company determine whether or not the company is undervalued or overvalued. So like the movie Beauty and the Beast, which is one of my favorite Disney movies, I watched with my daughter as she was growing up. Beauty is in the eye of the beholder, and so is value. So it just baffled me and blew me away, and I couldn't conceptually understand or just come in terms with, how do you determine if something is undervalued? Everybody, you see something that's beautiful, I see something that's beautiful, you might not, I might, so on and so forth. So in the market, everybody's got their opinion on what they believe value, something that's valuation is, or what is beauty, what is value. So that was the big thing. I read all the books, Buffett's books, and One Up on Wall Street, Peter Lynch, and all the great Graham, and all the great fundamental analysis books that exist. And I just fell in love with the concept I need to learn, and reading was the only way I could learn at the time. I tried applying at the big banks. They all told me no, so on and so forth. So I said, okay, fine. After reading for about 2 or 3 years, about fundamental analysis, I quickly realized that it's one piece of the puzzle. It's one tool in your toolbox, but I came across technical analysis. And the concept of technical analysis is real simple. For those of you that aren't familiar, is you want to study the stock. So think in your mind's eye of the company being one entity and the stock being a complete separate entity. So you can have a good company, a lousy stock, and a lousy company and a good stock, and any other combination thereof. So technical analysis is basically studying the price, the volume, patterns. You have a lot of indicators, go on, and there's volumes of books that are written about that. And I read about it. And after years of doing that, this was all throughout late high school and undergrad, and in my early 20s. And I was like, okay, great. So I've read the fundamental stuff, I've read the technical stuff, and they're kind of like two feuding sports teams. The Jets and the Dolphins don't like each other. Oh, let's cry. Or two religions, the Muslims and the Jews, or whatever. Two feuding people. That just didn't make sense to me. There's good here and there's good here, just like with sports, and right, the religion's all the same thing. I don't come from the mindset of a very rigid mentality of it's either black or white, especially with life and especially with markets. So I've learned, I said, okay, I came across Canslim and Bill O'Neill, who's the founder of Investor Business Daily, one of the best investors, greatest investors of all time. And I'll get there in a second. So what Bill O'Neill did in his infinite genius was he combined the both. He just took the good from fundamental analysis and took the good from technical analysis and put them together. Mm-hmm. And to me, that was just life-shattering, blew my mind at the time, 21, 22-ish. I'm like, oh my goodness, this makes perfect sense. It's genius. And then I dove in deep with O'Neill, and he's got a bunch of courses, level 1, 2, 3, and 4. And I took all those. I met Bill, I met his son, Scott, but that was years after I started the business and all that stuff. So I'm getting to the business part. So I came across the fundamentals, came across technicals, Canslim, put them both together. I fell in love with it. And I said, okay, I know this is what I want to do. At the time in college, undergrad, I was doing just odds and ends and random jobs here and there to pay the bills. I'm self-made started from minus zero. So I know how it feels not to have food to eat dinner, right? And can't afford the meal and that kind of stuff. So that sensitivity is always there for me. And I came across this world where I was like, okay, well, fundamental analysis is really good. Technicals is really good. Canslim puts them both together, but there's still, how many people can't make money trading stocks? Anyone, I'll get in a second with Jim Ropel with Growth Stock Mentor, which I recommend everybody join. Jim Ropel is one of the best, if not the best, traders and investors that applies the Canslim system alive today. And I partnered with him on Growth Stock Mentor, where he's gracious enough with his time and he shares his thoughts with members, and anyone can join. So, but at the time, I didn't know that was just recently. At the time, I've heard of Ropel, I heard of all these success stories, and I'm thinking to myself, I'm like, man, I know that this is possible. So the biggest hurdle here, it's the mental, the psychology. Why is that really important? Because years later, I developed a third school of thought, which I have a book being published by Wiley called Psychological Analysis. But I'll get to that in a second. So at this stage of the game, I'm like, okay, fundamentals, technicals, great. If I had $1 million, which at the time I thought was all the money in the world, how would I actually do? Because this is years after me learning and reading, and I got to the point where it's okay, you got to start doing, right? And I was trading at the side. I made a lot of money up. I lost a lot of money on the way down, and all the mistakes you could possibly make, and then some. So fast forward to grad school now. I'm in my dorm room. I'm like, okay, I've got a knack for this. I get it. I used to write daily reports, but I realized that for my style, it was too much in the weeds. It's not good for me. So really a big piece of my world is to find the time frame that works for you. And the beauty, as you know, Mike, one of my great lines or discoveries in life has been there's an infinite number of ways people can make money in life and in markets. Your job is just to find one that works for you. So the one that worked for me was the weekly time frame. And I said, all right, if I had $1 million in the world, how would I do? And I kept tracking the newsletter of the results of the returns. And I started sending it out to my friends and network. And one of my best childhood friends, actually, he was a big hedge fund guy. Well, he became one. At the time, he was interning for a big shop and whatever. So he's like, hey, my boss wants to read this. What do you think about it? I said, sure, send it to him. So he's like, why don't you charge for it? And I was like, whoa, me? Who's going to buy research from little old Adam, right? They don't know me from Adam, pardon the pun. And then boom, that was the launch of the business. So I was in my dorm room in grad school. I started writing, and then about the markets, it was my passion. It was a natural evolution, if you will. I took all this knowledge for almost 5, 6, 7, 8, 9, 10 years of acquiring and experience, by the way, and put it together in a weekly report, made it very simple for anybody to read it and use it. So where I distilled all the useless information and just said, okay, here are the facts, get in here, get out there, and how much to risk. And those are the 3 real keys of everything that I do. And then unlike Gates and Zuckerberg, who both started their businesses in their dorm rooms, they've become tremendously successful. I've had my own success, a very blessed life. And you guys know a lot of it because we've had a front row seats. We've seen our kids born together and so on and so forth. But it's really been a fantastic journey that I can't even begin to describe. But it's a blessing from above.
It's freaking phenomenal. Like everything that you've been through and built, what an amazing story, man.
I've left out a lot of details. Thank you. I mean, if you want me to keep going with a little bit more, shed some more color.
Go for it. So
my first job on Wall Street, because I applied at all the big banks, right? Everyone said no. And again, overcoming adversity and humbling and talk about, when you're that young and not understanding how the real world works, basically I go apply at these big firms, whether it's Morgan Stanley or Goldman Sachs, or at the time it was all these different banks for the brokerage side. And they basically, in a very roundabout way, asked me one question. They all asked different questions, but it came down to one thing. What's your network? If you hired today, how much money can you raise tomorrow? And that's all they cared about. At the time, I didn't have a network. I didn't know a lot of wealthy people. So I said, okay, well, nobody. Well, at the time they were smiling and dialing and, that kind of stuff. And that's why I didn't get the job. I didn't have a network. So at the time it was a very, yes, you could have gotten jobs in those places if you had the pedigree from the educational side. I didn't have the Ivy League schools. So I was I didn't check either box. So, okay, fine. At the time, my first job on Wall Street was at a firm, which isn't around anymore, called Canslim.net. So I fell in love with the Canslim methodology. I read all the book, I read the books and took all the classes. And then I was living in Boca at the time, and down in Lauderdale, I was listening to a radio show by Gary Culpon, who I'm partners with now on a website. We do convictionleaders.com, where Gary shares his thoughts on the market. And Gary's got a radio show. He's been around forever. If you guys don't know him, he's a great guy on Fox Business. He's a Fox Business contributor. But anyway, you can go to convictionleaders.com if you want he updates the market several times a week, several times a day sometimes, and he gives his thoughts with his members. And I was listening to his radio show when I was driving around Boca, just doing my jobs. I was in school at the time. I started at Pace in New York and I moved to FAU anyway. So one of the advertisers on the show was this website called Canslim.net. I heard it. I'm like, oh my God, I know Canslim. So Ken Grunheisen, the founder of Canslim.net, he started the website in 96. And this was in the early 2000s. So he was giving a seminar down at the local Marriott. So I said, all right, in Lauderdale, I'm going to the event. Why not? So I go to the event. And at the end of the event, I go up to him. I said, hey, Kenny, do you have any advice on how someone can get started in the business? And at the time, I'm a young whippersnapper and I'm just hungry. I want to learn. And he goes, yeah, my assistant just quit. Do you know anything about Canslim? I said, yeah, I read all the books. I took all the classes. He goes, whoa, where'd you come from? You dropped out of heaven, because he was looking for somebody. So I go in for an interview on the following Friday. At the time, I was doing odds and ends, working at random jobs. And I go in at Friday at noon. True story. I left at midnight. Needless to say, I got the job. Him and I hit it off and became fast friends. He's, again, one of the, just a great guy. And he interviewed me for about 2 hours from Friday noonish to about 2ish about my knowledge on Canslim. I knew it all. I could finish the sentences. We clicked instantly. And then he's like, hey, I'm doing my aftermarket report. I just wanted to learn. And I was so happy that anybody would give me, the time of day. So I'm like, can I hang out? And he's like, sure. And he's like, actually, I'm staying in. It was Friday. I'm going to order dinner in the office because I'm going to Chicago in 2 weeks for another seminar. And we're putting the slides together. You want to help? I said, sure. So we sat down together and we just plowed through it for the rest of the night. And we ended up leaving at midnight. Needless to say, I got the job. And he had two basic businesses at the time. He had a membership site, which was Canslim.net. And that's when I fell in love with the financial publishing. And I could see the tens of thousands of people that were in the membership, in the audience. And I really understood from a guy that was hungry to learn how the value that's being provided for membership sites with the financial world. And that really captivated my mind. So that's what I've been doing ever since in parallel. And then he had the money management side, the brokerage side. So I got the Series 7, became a broker, and the 24 and the 63 and several other licenses as well. And a lot of the people that would sign up to the free report would pay for the membership and then would want us to manage money for them. And that was more or less how we built the big book of business. And then I really saw the transactional brokerage business dying, just like the floor of the major indices or the pit, if you will. It's not a sustainable model, because in the brokerage world at the time when I was doing it, you don't have discretion over your clients' accounts. So in order for me to manage Mr. and Mrs. Lamothe's account, I'd have to call you up and say, hey, Mike, or hey, Melissa, I want to sell 100 shares of Apple for you. I want to buy 1,000 shares of XYZ for you. Is that okay? Now, you guys are busy. You're running your businesses. You're doing whatever, playing with the kids. It doesn't matter what you're doing. You don't want to be talking to me 3 or 4 times a day or week or month or whatever it is. Just go do what you got to do. That's how most of these people are. They're doctors, lawyers, whatever it is. So, and if you have 100 clients, what are you gonna do? Sit there and make 100 phone calls to ask permission to buy a stock or sell? It didn't make sense. And at the time, we were charging huge commissions, 2% a trade, which was not sustainable. So I just said, okay, this makes no sense to me. And I looked forward. I'm like, okay, the path here, I need to move on the other side of the business, which was the registered investment advisor world. So I moved into that for a little bit, left the brokerage stuff. And then Kenny sold his business to Bill O'Neill shortly after I joined, and they did a big agreement. And that was a big, huge, world opener, great environment. And then after the 10 years was up, I had left before that, and then they shut down Canslim.net, and I went off on my own. But at the time, I was also doing some other things. So I did the money management stuff for a little bit, but I realized very early on that wasn't for me at the time. I really enjoy my freedom of being able to buy and sell whenever I want from my own accounts and for my, whatever I want to do. And then I love the membership side, because I can write the report one time and I can send it to 1 million people or 10 million people. It doesn't matter, right? So I didn't have to worry about the customer service angle of it. So from a scalability standpoint, the membership website to me was just a no-brainer. So since then, I've been very blessed and very fortunate. I've had very large clients come to me over the years, including the big investment banks that told me no early on. Have just about all of them that I applied to, actually, all of them have at one point or another been a client and or a member. And some of the very big self-made multi-billionaires have been clients of mine, or their family offices or their hedge funds. Their portfolio managers are members or have been members. And also, very, very well-known people, suffice it to say, have become members of mine over the last 20 plus years. So I've been very fortunate over the years to be able to help people. And that's what really drives me now, because it's no longer about the money. It's like, yeah, that's fine, sure. But the primary motive, the money's a byproduct. The primary motive is figuring it out and the love of the enjoyment of helping other people. And that's really what drives me today. So that's been my story as far as how I got to Canslim.net. And then I went off and did Find Leading Stocks, and I did globalmacroresearch.com. And I really understood the value proposition from the member's point of view of why you would subscribe to one of these services, especially if you've got a good guy who's helping you and they get it. It's not to just get rich right this second. Those kind of, it's not my world. Slow and steady. It's measured over years, decades, and the system works. You manage risk, you manage reward. Risk and reward are the two basic elements of any trade. And over the long term, you risk a little when you're wrong, you make a lot when you're right, you're going to do exceptionally well.
I freaking love everything that you're saying, and especially like the part about like going and help and being in this because you love to help people out. Like I think that's one of the reasons why we worked well together for so long, and why we're friends now for close to a decade. So from what you've learned like over the years and creating the system and everything, how do you go and you find the big leading stocks? What's in the secret sauce of your methodology?
So it's a great question. I mean, there's an infinite number of ways to trade stocks, right? So you can buy value stocks, you can buy growth stocks, you can buy undervalued growth stocks, so on and so forth. So part of my story is, my name's Adam. People early on, when I was explaining to you, I left out a big piece of the story, was people would say to me, I don't know you from Adam. Why should I invest with you? Good question, right? It's not the first time or last time someone's going to ask me that question. So early on in my journey, I said, okay, I've got to figure out how to overcome that objection. So I started getting in the media. And then this is where the leading stocks part comes in. I had to carve out a niche for myself because I can't be the jack of all trades. You're the master of none. So I really fell in love with the concept of finding big growth stocks, leading stocks, like Bill O'Neill calls it. And I said, okay, great. So over the time, I've been on every major financial network from CNBC to Bloomberg and Reuters, and the list goes, Fox Business, the list goes on and on. A few years ago, almost a decade now, I don't even remember, to be honest with you, but several years ago, Forbes reached out and said, hey, would you be a contributor? I said, sure, jump how high. Now I'm a contributor and thankfully blessed with millions of readers on Forbes. And it's all due to my ability to filter out the noise. And I've decided early on, I want to focus on strength. If I can focus on the creme de la creme, the strongest stocks in the market, by definition, I'm filtering out all the junk, for lack of a better word. And if I can do that, that's my focus, just the strongest stocks in the market. And they're going to change. The names change all the time, depending on the cycle, so on and so forth. By definition, I'm going to do very well. Because if you're only swimming in the top quartile or the top 30% of stocks, you don't have to worry about the ones that aren't moving. So that was, again, I owe that to Bill O'Neill. I learned that from Bill. So he said, okay, great. Why focus on the stock that's at a 52-week low that doesn't have any earnings? You can, but why? So in sports, I'm not a sports guy, but if you like sports, I'm pretty sure you know the top team, the top 5 teams in your bracket or your sports, whatever the word is, right? In your division, because you're following the scores and you put the points on the board. You see the strongest teams. You know the Yankees are doing well this year. The Bills are not doing good. Whatever the case may be. In the market, and I've spoken to thousands and thousands of investors. I'll bet right now, anybody watching, top of your head, tell me the strongest stock in the market on a percent change basis this year. Crickets. Every single hedge funds, mutual funds, ETF managers, big money managers, small individual investors, everybody in between. And it blew my mind. I'm like, how could you be trading against the biggest, wealthiest, smartest guys in the world? That's your competition on Wall Street. I'm not playing against Shaq or Michael Jordan. I'm playing against these behemoths. What's your edge? How could you not know the strongest team in the division or in the league or whatever, right? So, okay. It's not rocket science. Nothing I do is rocket science. And that's the beauty of it, right? It's simple. A 5-year-old can understand it. Hey, there's a bunch of things, bunch of stocks. They're called stocks. There's strong, there's medium, and there's weak. We look for the strongest ones. and buy them, not when they're super extended. Make sure you buy them when they're pulling back. And I'll get to that breakout versus early entry point in a second. So that's more or less the answer of the genesis of why the find leading stocks is so big in my world. Now, do I invest in other stocks? Sure. Do I trade other stocks? Sure. Every once in a while, but that's neither here. I mean, that's such a small piece of the overall focus that it's a blip on the radar, if that at all.
So to make sure that I understand correctly, the way that you are defining strongest stocks is based on the percentage change over the past year or over the past 6 months, or is it like, do you have it broken out like that? Are you looking at other things like maybe relative strength or other classic criteria?
Year-to-date percent change. A 5-year-old can understand. Super simple. I want to see the strongest stocks in the market. How do I do that? Well, we started the year. Here are all the stocks in the market, percent change, and you can, thanks to technology, which again didn't exist in my time, but well, it did, but not like the way it is today. You click a button and you could sort the strongest percent movers on a percent change year to date on just about anywhere for free right now. You put your criteria in. You want to see stocks. I don't do penny stocks. So over, $15-20, I want to make sure they're small cap or larger. I don't deal with the micro caps and, it's just not my world. So I've got institutional clients, right? So I've got to make sure that they're institutional quality stocks that I'm interacting with. And plus I can't interact with the small guys. So the micro guys. So, okay, you can run screens. It's free. It costs you nothing. And you sort by percent change. Now, why is that important? Because it's facts. You can't argue with the strongest stocks in the market. Now, if I tell you, here are the fastest, strongest, growing stocks from a fundamental standpoint, look at their ROE or ROI or EPS or LMNOP or QRS or TUV. It's all subjective. Sure, you could say this guy's got, it's not all subjective, but it's subjective in the fact that it doesn't impact the stock price. Meaning there is no correlation, 100% correlation between the fastest growing EPS, ROE, ROI, whatever metric you want to use from a fundamental standpoint to the stock price on a year-to-date percent change. Same with technicals. There is no correlation that I've found. If anyone's found it, by the way, please get in touch and share with me. It just doesn't exist on 100% accuracy, basis, or even a 90% accuracy or more basis of, hey, the fastest, strongest growing stocks from an earnings standpoint are the ones that are going to crush it and going to go up year after year. So I needed something solid, something that's factual that you can't argue with. This stock's up 200%. Look, Tesla, full disclosure, it's a stock in the Find Leading Stocks portfolio. It's up 500% from when we bought it less than a year ago. What? So I can't make it up. I mean, look, you see the portfolio, you put money into the FLS portfolio for years, right? So the idea is is that I want something that's real, that's tangible, that's easy, it's simple, anybody can use it, because if I don't understand it, then there's a problem. Now, let me explain to you what that means. So I just took my kids, it was actually my daughter, Sophia, you guys know, she turned 9, which again, right? Just two weeks ago. And I took her to Disney World. Great. So we're at Magic Kingdom. We're on Goofy's Barn Stop, one of the rides, and it's Goofy there. And I'm sitting there in line, and I'm looking around at everybody else. And it dawned on me. The subconscious mind, which I can dive into a lot more because I've got a whole book coming out called Psychological Analysis, right? So I'll just keep it real simple. There's 2 parts of our mind. There's a smart mind and then the dumb side, or this conscious mind and the subconscious mind. The subconscious mind, the reptile brain, or whatever word you want to use to describe it, is Goofy. That's simple. If Goofy doesn't understand what I'm saying right now, I've got a problem. I'm Goofy, essentially, right? Because our subconscious mind is really in control, unless if you're consciously telling yourself to do X, Y, Z. Look, if you don't believe me, just look around the world, right? Weight. It's very easy conceptually to lose weight. It's calories in versus calories out. A simple formula that anybody can understand, but it's not easy to actually implement. Well, making money, it's the same thing. Cash flow in versus cash flow out. Everyone, I talk to people all the time, and I've got a coaching program, all this kind of stuff. Oh, I wish I could make more money, Adam. I wish I could make more. Guy, you make $10 million, you spend 11. What happens? You're still -1. certain things, you just have to understand how things work. So things can be simple, but very difficult to implement. And that gap or that void between knowing I should do this or I shouldn't do that, and then actually taking the steps and doing it is goofy, is what I call goofy. So finding leading stocks, Mike, to your question, to me, Goofy needs to understand it. That's my litmus test for everything I do. It's right. Not to belittle or it's just simplicity, right? There's a certain art, a certain elegance in simplicity. So, okay, if I can rank the fastest growing EPS, fastest growing stocks from an earnings per share standpoint, or from a highest relative strength, anyone can run those screens, but not anybody can be a really good trader. So there's a missing element. And that's why I use percent change, because if you're looking at the leaders, you can't argue with the stock is up 10%, the other one's up 2%, the other one's up 500%. Again, hypothetical examples here. Well, what's a leader? There's no ambiguity there, right? Goofy can understand that. And that's why I use percent change to determine leadership from my standpoint.
That's great. Simplicity is the ultimate sophistication, as Da Vinci would say.
Right.
So, another topic that we were going to dive into was how to buy before the crowd. So how are you buying these big leaders before the crowd?
There's 4 letters, Mike, that I want to share with the audience. It's my investment system. It's my version of Canslim, right? So there's an infinite number of ways to make money in the market. You've got a wide open lane, if you will, or multiple lanes. So what are you going to do? You need structure. In order to have a healthy transformation or to accomplish goals,
right?
Allow me to go somewhere with you for a second, but stay with me because it's an important point here. So right now you're in New York, right?
Yes.
I'm in Florida right now. So I recently drove down from New York to Florida with my family. We had our version of a Griswold family vacation. I've got a 9-year-old and a 4-year-old, right? And we had 2 separate cars. So it was very fun. Now, thankfully, due to iPads, it wasn't as bad, but it was a piece of cake. So what happens is if I'm in New York and I'm driving to Florida, what direction am I going? North, east, south, and west. I'm going to go south. Well, okay, that's step 1. Step 2, before I even hit the road, I'm going to map out on Google Maps or Apple Maps or LMNOP Maps, MapQuest, whatever you want, whatever tickles your fancy, and the GPS in your car. Hey, here's my destination. Here's where I'm starting. Here's where I want to go. It's a very clear destination, and then you have a map on how to get there. Well, I can't do the drive with 2 young kids in one day. I can't do it myself in one day, right? So I'm going to map it out. I'm going to stop here. We said, okay, get reservation. We make the first drive, the first day, the bulk of the driving. So we'll drive the bulk of it, stop in this city, in this hotel. Great. The next day, wake up, and we've got a few hours, and we'll be in town, and that's it. Great. That's the plan. Now, that's one person. We've got another person who's in New York, standing up on the Empire State Building on the observatory deck and saying, I want to get out of New York. Where are you going, buddy? I have no plan. There's no roadmap. Who's going to get to their destination first? The guy who's screaming with passion and I'm so into it, so irritated. I need to get out of here. Where are you going? I don't know. I just want to go. Or the guy who's got calm, cool, and collected and say, hey, I've got a plan. I want to go south. And here's how I'm going to get there. I'm taking 95. I'm going to, blah, blah, and this and the other thing. You go into a supermarket. There's 2 people. Person A has 3 things on their list: milk, bananas, apple. This just happened to me the other day. Strawberries, not even apples. The other guy, Goofy, walks in there with no list. Who's going to get the things? Who's going to be more efficient with their their time in the supermarket and actually walk out with the things they want and not buy 30 other things or be distracted or forget or the phone rings and then whatever, right? The guy with the list, the gal with the map. So it's the same thing with investing. So I had to figure out the early entry points. This is the question. So let me bring it back to you. There's got to be structure. Everybody, humans need structure, right? The best athletes in the world, study successful people. You think Richard Branson or Elon Musk or Steve Jobs or anybody that's really uber successful wakes up without a purpose, without a plan. Jeff Bezos just like, hey, what am I going to do today? Let's see where the wind blows me. No. They're very deliberate with what their conscious brain tells their subconscious brain to do. And they have a map and they're going to follow the map. And when they get off track, they quickly pull themselves back and they follow their plan. Bill O'Neill did it with Canslim. Countless other people do it with their own. So I developed my own acronym. It's called AMPD, AMPD. It used to be called DAMP, in case if people are confused and know us from way back when. The connotation wasn't good. I'm not a marketing guy, so I didn't, I just thought, okay, this makes sense, so do it. And you'll understand why it was DAMP, but now you'll understand why it's AMPed in a second. So there's 4 things. You can get a pen and write these down. The first thing, again, this is super simple. Advanced early entry points. So most people buy breakouts. This is to your point, Mike, the question here. What is a breakout? You've got a stock trading, let's say, between 10 and 15, right? Support and resistance, for those of you that aren't familiar. If a stock's going between 10 and 15, and it does that for 6 months, 15 is resistance, it's a ceiling, and 10 would be support, a floor. Here's this and here's this. And then the stock going back and forth would be bouncing between support and resistance, right? Well, let's just say one day you get, here's 15, the stock does this and blast through 15, it goes to 17 on massive volume. But what happens? That's called a breakout. And it's a breakout on monstrous volume. Is that a good thing or bad thing? Well, most technicians say that's a very good thing. And the pivot point, or the classic buy point, and you can go back and read all the great books. Livermore talked about it. He called it something else, and Darvis and all these kind of guys. So the idea is to buy it when it gets above 15. 15.10, 15.20, and you have a max buy price 5% above there. And that's more or less the gist of it, which most technicians use as they buy breakouts. So is the crowd usually right, Mike, or is the crowd usually wrong, Melissa?
Usually wrong.
Yes. So if everybody's buying breakouts, and by all means, I tried this for years, it didn't work. So there's nothing wrong with buying breakouts, it just didn't work for me. So if the crowd's usually wrong doing something, I'm trying to do that, not working, trying to do that, not working, try to do that, not working. What's the definition of insanity? To keep expecting different results, right? So I said, okay, I've got to do something different. And again, this was way back when I said, okay, I'm going to be buying early. So a big piece of my business is dealing with institutional investors. And when I would interact with these big institutions, they're not buying breakouts. And it blew my mind, right? They're buying on the right side of those bases before the stocks break out. Because if you're managing billions of dollars and there's only a few million, let's say 50 or $100 million in the float on any given day of the stock, you can't buy a full, and you want to buy, I don't know, $500 million worth of stock. You can't buy everything in one day, right? The big Fidelities of the world, just the big, huge monster players. So what do? I didn't know this at the time, but what they do is they scale in and they scale out of positions. Not like small individual investors who can buy 100 shares, click, and 1,000 shares, click, and be done. It doesn't work like that. So they're building the base. When I learned that they're building the base, I was like, oh my goodness, this is the biggest, smartest guys in the world. This is what they're doing. Why am I, and it's working, right? Why am I waiting to buy it all the way up off my hands, even off the screen? You can't even see it. To me, the breakout was just way too high. And for me, it's all about risk and reward. There's many takeaways here, but the one magic thing, if there is one, risk reward, understand that. The other magic one thing is something I learned from Howard Marks. He's got a great book. Here it is. Howard Marks is a $1 billion money manager. He's a friend of Buffett's, and he's a big value guy. And he runs Oak Tree Capital. You can go on YouTube and watch his things or read his books or whatever you want. But he has a great line. He goes, all investing, and he's not a technician, by the way, all investing comes down to 2 things: probability and outcome. That's it. Again, keep it simple. Remember, the military's got this. The military's got this KISS acronym. Keep it simple. The last S is for me or for goofy, right? So everything I do is real simple. Everyone's buying breakouts. The crowd usually is wrong. Okay, well, I need a slight edge. What's my edge? Buy early. So I started using those downward sloping trend lines to buy and buy on the right side of the base. And the other reason of doing that is that it greatly, and I mean tremendously, improves my risk to reward ratio. Because when I'm wrong this much. And when I'm right, I'm in. I've got a cushion by the time the breakout happens and everyone else is buying. So it was a no-brainer. So I tend to buy now stocks that are in uptrends. They're already leaders. They've demonstrated themselves. They're pulling back. They're digesting the move. Remember, all leading stocks all pull back. It's not a matter of, is this stock going to pull back? It's a matter of when it does. So when it does, people that are buying late, to find that however you want, are shaken out. Well, okay, I'm just going to wait and back up the truck. I know the pullback's going to happen. I'm going to be patient. When it pulls back into the 50-day moving average, to a prior chart high, into an upward trend line. So there's so many ways that we do this, but just to oversimplify it here, downward trend lines. You got an uptrend, pulls back. You don't buy the dip. I was interviewed on Fox Business by Liz Clayman years ago. She said, "Oh, how do you have an interesting way of buying the dip?" I don't buy the dip. I buy the bounce after the dip. So that's the A in my amped investment system. So buy early. You get a better risk reward ratio. You're buying with the institutions before the crowd. And then you also have a much better cushion when it actually gets going. So that's all that news. M, market conditions. Same as the M in Canslim. You want to be with the trend. You don't want to swim against the tide. It's just common sense. Most stocks follow the market. You're in a massive bear market. You don't really want to be going long, and you're in a massive bull market. You don't really want to be going short. Of course, there's exceptions, but you get the point there. Then P, which is psychological analysis. We haven't really touched on this yet. Again, there's a book coming out on this topic. What is psychological analysis? Put simply, and this is, again, a 5-year-old can understand this, is you want to learn how to make rational, not emotional, decisions with your money. Well, what does that mean? Hey, Adam, I make rational decisions. I'm different. I'm not like the crowd. I'm not like everybody. Yeah, okay. In psychology, there's something called cognitive biases. We all have them. If you have a mind, you have biases. One of my favorite biases happens to be a personal blind spot bias. If you're not familiar with what that means, it basically means you can't see your blind spots. You can Google it if you want afterwards, so dive as deep as you want into it. So if you ask 100, let me illustrate what that means in plain English. If you ask 100 newlyweds, how many people are going to get divorced? How many people do you think are going to raise their hands? Yeah, goose egg. Why? Statistically, we know more than 50% are getting divorced. But they're living in la la land because there's a personal blind spot. But it's not going to happen to me. It's not going to happen to me. It's going to happen to you, but not me. You know what I'm saying? So, okay, once I understood that, I said, okay, I've got to overcome that. So part of the coaching program I have is the idea, and we've talked about this a lot, Mike, in length, is most people, if you ask the same thing, again, I speak at these events and all, thousands of people and investors and traders, institutions, blah, blah, blah. It's all the same. People are people, right? So I've gone back to the 3rd century and studied economics. I've gone back and studied bubbles and busts. The people change, the centuries change, the asset classes themselves, tulips, .coms, real estate, credit, whatever you want. They all change. The one common denominator is what? Human nature. It's constant. So, okay, if I know that, then like Ray Dalio says, he's got a genius line. It's another one of what? Another one of these. It's happened before to somebody else. So if you are oblivious to your own biases, then how are you possibly going to become one of the best traders in the world? Can't do it. So that's another layer of psychological analysis. The 3rd step is we all have hot streaks and cold streaks. Gamblers call it you're on tilt. Athletes say you're hot or cold. It happens to everybody, right? People are emotional creatures. If I wake up and I'm in a fight with my wife for no reason, she wakes up and she's in a bad mood, or my kid comes in going crazy, bonkers, throws a fit, whatever, enter any other stressor, negative event that could occur, or really positive event, right? Is that going to throw my emotional equilibrium off? Or am I just a robot where it doesn't impact me whatsoever?
Yeah, of course you're going to be impacted.
Yeah. So what do you think that's going to do to your decision-making process if you're emotionally impacted by these outside stressors? Help it or hurt it?
Yeah, it's going to throw you way off.
How many traders take the time to focus on all that stuff, right? It doesn't happen. So it really clicked for me, the penny drop, so to speak, when I realized this is a mental game. It's not a physical game because I can play this game and win. Physical games I can't play. Here I have a chance to play and I win. So it's like, okay, there's something else there. So that's if fundamental and technical analysis is enough to beat the market, everybody would be a billionaire. It's a fact, right? So clearly something is missing. After years of getting my teeth kicked in, so to speak, in Wall Street and losing and blah, blah, and trying to figure it out, it finally dawned on me. So, Melissa, I'll ask you a question. You ever do something and then you hit a wall?
All the time.
Mike, you too? I mean, everybody listening? Yeah, who hasn't, right? there's a whole science to it, but I'm going to simplify it again just so I can understand it here. I call these things mental walls. What is a mental wall? Well, you're learning something at the beginning, doesn't matter what it is. There's a big J curve, like a big jump in how fast you can accumulate that knowledge, or how fast you can learn something. And then inevitably it levels out. So you start here with not knowing, and then you learn, and then you hit a wall. You plateau. Working out, you see this all the time, right? You lose 10 pounds. Oh my God, I'm so happy. And then you just stuck there for, it could be years. So you plateau. And then either you regress, you go back down again, or you plateau, stay there forever, or you go up and you learn again. You have another growth spurt, and then you hit another wall, so on and so forth. So I've developed a whole bunch of mental walls for trading. And it's really, really eye-opening, for lack of a better word, when you dig in deep. And you ask yourself, what really is impacting me? What's influencing my mind? How am I moving right or left? Anyway, I'll go on and on for hours on psychological analysis. I don't want to go any further because that's enough for the question. I've already gone above and beyond.
Oh, this is so wonderful, Adam. I just want to open it up to everybody. If you would like to ask Adam a question, feel free to put it in the chat or the Q&A box, and I'll be able to ask it to Adam today. And then I'm going to actually lead it off here because I love this whole, but I love your analogy with the person A and the person B having a roadmap, and the person who's just like screaming off at the top of the Empire State Building. What happens, because like this happens to me when I go into a store like Target and I have a map, but then I end up leaving the store with like, maybe I go in wanting just to get like 3 or 4 things, I leave with 20. I'm sure everybody has been in that position. So what happens when you have a map but you get distracted? You're like, oh wow, that shirt looks really great, or I want these shoes. How do you deal with that situation?
So my friend Jim Ropel calls it guardrails, right? You want to be able to protect yourself from yourself. That's the short answer. Whether it's taking yourself out of the decision-making process, getting other people. Mike, your coaching program is absolutely fantastic. I recommend everybody join it, because when you have accountability to somebody else, and Napoleon Hill talked about this in famous books, and it's when you learn success, you have to have accountability to yourself and to others. So let me just finish the fourth one to amped. We talked about AMP, and the D is the fourth one before we go any further, if that's okay. Yes. The D is defense first. And that's why I had it damp at the beginning, right? Because I was, okay, literally I had that defense first. So after you do the A and the M and the P, the early entry point, the advanced entry points, the market condition, you align yourself with the trend, and then the psychological analysis, diving deep there. The fourth component is defense first, meaning always respect risk. If you go back and study in 08 or 2000 .com crash, which I've traded through both, the big investment banks that failed, or anybody that's failed on Wall Street ever, failed for one reason and one reason only, because they did not respect risk. So if you always respect risk, not just from what I bought here, I get out here, that's fine, but you have to understand what the impact is to your portfolio. How much am I going to lose of my portfolio if I'm wrong? And that was really a huge, huge, huge piece of the puzzle. So that's the amped investment system, the advanced entry points, market conditions, psychological analysis, defense first. And then when you go into each one of those, we can go as deep as you want. So Melissa, to your question here, or the viewer's question, you want to really have accountability, number one. Number two is create those guardrails that Ropel talks about. And number three is figure out how to protect yourself from yourself. And what I mean by that is what I learned from Dalio. Ray Dalio, the biggest hedge fund guy in the world, says we all have blind spots. Again, the personal blind spot bias. But not just that, we have strengths and weaknesses. I'm good at something, you know me very well, so I'm very good at the big picture. Ask me to do something when it comes to details, you push me out of the way. I'm just going to stumble it. I'm lucky if I can tie my shoes in the morning. Big picture, should we go this way or that way? Or da-da-da? Great, I shine. So my time frame, let me show this to you in practical terms, is the weekly charts. I don't like intraday charts. It's all blur to me. And I like dailies for a certain extent, but the big money is made on weekly and monthly and quarterly and annually charts, right? I can't be up 500% or 499 to be exact in Tesla by looking at every single tick. In fact, I recommend people don't look at every tick. If you ever hear of bronchitis or any kind of itis, I call it tickositis. When you stare at the screen all day and you're looking at every tick, you're making emotional or irrational decisions. Of course you're making emotional decisions. So Melissa, that's the beginning of how you do it. But you've got to find somebody like Mike who understands, who's been around, who's got your best interest at heart, and who's there to help you. And you pay them to make sure that you are following your own rules. And make sure you have your own rules. The map, you want to go south from New York to Florida, maybe you want to go to California, you're going to go west. You have to have a roadmap. What are your rules? I took Canslim, I put a little twist on it, made it my own, and I sprinkled in a lot of other things that didn't exist. I created things that work for me based on my strengths and my weaknesses and countless others. But it's something that is time tested and it works in multiple cycles. So be very, very careful. You know, they say everyone's a genius in a bull market. Well, okay, everyone is a genius in a bull market. But you've got to understand, bear markets happen, corrections happen. Make sure your rules work in both up and down markets and sideways markets.
All right, this is great. Thank you so much for answering that. We also have another question from Al. He asks, Adam, how do you pick up yourself after a big loss?
Great question, Al. So we all have winners, we all have losers, and we all have hot streaks and cold streaks. So part of today's conversation, Mike had asked me to talk about holding big leaders, right?
Yes.
So we'll get to that first in a second. But the way you pick yourself up from a loss, well, Al, there's two things. Number one, don't let yourself get into a big loss. It happens rarely. You get a big gap down, but if you're buying early, the A and AMP to the advanced entry points, it's very rare. Mike, you've been watching fine leading stocks since 2013-ish, I believe, or somewhere in that range. The biggest loss we've had is what? Down 8%, 7%, something like that?
Yes. It's always in the single digits.
Yeah. Even with, and we've had gaps, by the way, gap downs. We've had such a cushion where if it gaps down on us, it happens infrequently, but it does happen. We still have a cushion. So the first thing you do, Al, is always make sure you're protected. You're not in a position where you're going to have a big loss. Now, when you have a series of losses where you're wrong 5, 6, 7, 8 times in a row, it doesn't happen. It happens. It doesn't happen every single day, but it does happen. So how do you pick yourself up from it? Understand that losses are part of the process. If you drive to work in rush hour traffic and you're in traffic, what are you going to do? Be full of rage and upset and anger and blah. I can go on, but I'm trying to keep this rated G. Or do you step back and say, hey, listen, it's fine. It's going to happen. I anticipated there might be traffic here. I don't want the traffic. I'm going to exit or get out of this as fast as possible. I'm not saying to be a pushover and just deal with it. Oh my God, I'm in traffic, blah, blah. No, do your darndest to get out of the traffic. But until you exit, do your best to enjoy it. It's inevitable. Losses happen on Wall Street. Fact. Especially if you're an active trader. Fact. So you have two people in road rage, like in the same traffic. One guy's got his hair down, listening to music and relaxing, doing his best to get out of the traffic. But while they're in it, while they're in that drawdown, they understand they're impartial. They understand it happens. The other guy sitting in the car, the other gal, furious, screaming, blood pressure through the roof. Who would you rather be? Let's put it that way, Al. And that's the answer to the question. It's inevitable. Drawdowns are going to happen. Try to keep those losses small, small, small. And over time, understand the other side of this subconsciously and consciously. Understand just about in good investment systems, all drawdowns eventually end. So if your investment system has a positive expectancy, which means in layman terms that you're going to win in the long run, if you have drawdowns along the way, understand it's okay. Just do your darndest to keep those losses as small as humanly possible.
All right, great. Adam, you mentioned the psychological analysis book that's going to be coming out. Can you give a little bit of background about why you wrote that book and a little bit about what you have to share with the book?
Yeah, sure. So it's a passion of mine behind markets. I love psychology. I love to learn, pardon the pun here, what makes people tick, right? So, okay. Again, self-made, all that kind of stuff. Nobody taught me these things. I had to learn them. And I realized that I had to unlearn a lot of the things that I quote unquote was taught as a kid, whether consciously, unconsciously. There's no judgment here. Love my parents dearly, blah, blah, blah. But society, for whatever reason, most people, and by the way, this goes back to centuries. Go look at Freud. Sigmund Freud was the first guy to really nail this on the head. Where we have unmet childhood wants and needs for attention. I'll repeat that. All of us have unmet childhood wants and needs for attention. What does that mean in plain English? We have a certain amount of childhood baggage that needs to be just physically, consciously dropped. If you walk around carrying that all day, I'm not good enough, I'm not tall enough, I'm not smart enough, all the negative talk, I don't have to sit there and explain it to us. You have to consciously drop it. And then consciously create the positive mindset that you want, which is a positive outcome, positive expectancy. So again, this is something I learned from Jim Ropel on Growth Stock Mentor. He's extremely bullish and extremely optimistic, not about the market. He's bullish on himself. Notice the difference there. Huge difference. He happens to be bullish on the market, sure, but he knows in the next 20 years or the next 10 years, the next 5, he's going to catch some of the biggest stocks in the market. It's his fundamental truth. That's just how his brain is wired. That's one trader. Now take another guy or another gal who thinks the exact opposite. Oh man, life is against me. Things are bad. I never catch a break, so on and so forth. All the negative talk you can possibly think of. Who do you think is going to have a better outcome? Person A or person B? So I happen to come from the person B mentality. That was me for a long time. Again, but it doesn't matter. I recognized at a very early age in my late teens that something had to change. Become alive, full of energy. That's why I'm passionate about this stuff. And yes, I speak and, I'm intense about it because I want to wake up. It goes back to waking my prior self up, right? So what's stopping you from becoming a billionaire right now? It's not me, I'll tell you that much. It's not the market. It's not the economy. It's not the latest headline du jour. It's none of that stuff. What it is you. Most people don't want to accept that or realize that or take responsibility for that. In fact, they do the exact opposite. They'll blame every single possible person in the world for all the reasons why they're not getting ahead. And that's the definition of not being successful. So the top 1%, what do? The exact opposite of what the crowd does. So my understanding, Melissa, was I came across these certain universal truths, right? You walk into a theater, yell fire, Mike, what happens?
Yeah, you get a stampede towards the exit.
Yeah, it doesn't matter what your language is, what your race is, what your education is, what your socioeconomic, financial stability, it doesn't matter. It doesn't matter if you're 5,000 years ago, 5,000, it's going to happen. Mike, you make $5,000 right this second, falls out of the sky. Are you happy or are you sad?
Yeah, you're happy.
Yeah, who's not? It's not a matter of 5,000, a lot of money, not a lot of money.
Me, right, Mike?
Of course.
Exactly. Now imagine Melissa, you lose 50 grand. You happy or you sad?
No, that wouldn't be a good day.
Now, the exact opposite and the exact thing happens all the time. That doesn't make much sense, but I'll explain to you what it means. Subconsciously, we're going through those emotional roller coasters up and down all day, every day. We're just not aware of it. So there's the subconscious brain, which by definition, we're not consciously aware of what's happening back there. And then there's a conscious mind. So consciously, oh yeah, I feel elated right now. I feel happy. Well, okay. Well, subconsciously, what are you feeling? Most people aren't tuned into that part of the brain, but it dominates most of our lives, or the negative thought and beliefs that we're taught over and over and over again. So the genesis, Melissa, the long-winded answer here, and thank you for bearing with me, everybody, to why I wrote the book is I learned several universal truths that I wish I knew when I got started that helped me become a better person first, and then better trader / investor second. That's why I wrote the book, because I can share what I've learned. And again, this is not the gospel. This is not me saying, hey, this is the be all end all. You're going to open the book and oh my God, you're going to become a billionaire. No, none of that stuff. All it does is just shared what I've learned along the way with anybody who wants to read it. What are mental walls? How to overcome the mental walls. The difference between the conscious mind and the subconscious mind. Psychological analysis. When you're trading, are you trading based on emotions or are you making rational decisions? Are you happy or are you sad? Is that impacting your next decision? Like Al just asked, how do you overcome big losses or a series of losses or a drawdown? You know that it's going to end, so on and so forth. If you don't know the answers to all of these things before you go in there, it's like the guy who's in New York says, I want to get out of New York. Where do you want to go? I don't know. I just want to get out of New York. I'm not happy. Why are you not happy? I don't know. What do you want? I don't know. Why aren't you happy? I don't know. You follow? So it's just that whole negative spiral. It's just to get you off of that negativity and put you onto a positive one, which allows you to take ownership and control of your life from the subconscious it's just a lot of it is just patterns. You just have to break the pattern, interrupt it, and then create a new pattern. Instead of a negative pattern, create a new positive pattern. That's ultimately what it comes down to.
I love it, Adam. I can't wait to read it. We have 2 more questions, and I'm going to hand it back over to Mike. The questions from Anthony: how do you choose your stop losses when you're up big on a position, and is there a certain moving average or level that you look at?
Oh, that's perfect, because that's starting to get into how do you hold for the big move. That's what I want to get better at too.
Yeah, Mike. So that's actually, I was going to go right there. Melissa, thank you for asking. So there is no right magic formula. Now, people must be crushed. Oh, no, I thought this guy's going to give us the Holy Grail. In investing, in Wall Street, in markets, in life, you have to figure out an approach that works for you. What does that mean in layman terms? Somebody might be really good with weekly charts. The other guy might be really good at daily charts. Other guy might be really good at using 50-day moving averages. Someone might use a 10-day moving average crossing over a 100-day moving average, or whatever the case may be. The idea here is when you have to ask yourself, what is the objective? Look, I don't have a six-pack, confession. Okay.
I do. It's in the fridge.
Mike, I wish it was, right? So I've never sat down and did the work, did the sit-ups. So if I take action and I do the sit-ups and I do, let's just say 2,000 sit-ups every single day. I asked a trainer one time, how many sit-ups do I have to do to get a flat stomach? You know what the answer was? I'm thinking he's gonna tell me 6 weeks, 6,000 sit-ups, 10,000 sit-ups. Give me a number. His answer was as many as it takes. You know that little emoji where the head blows up on the iPhone? That's what happened. I said, oh my goodness, that's just a stroke of genius. And it's the same thing here to the person who asked the question of developing stop losses. What is your time frame? Do you want a flat stomach or do you want a six-pack? Are you a short-term trader? You want to take 10% gains, 20% wins, 50% gains? You want to go for 500% gains, 100% gains? What do you like trading? Do you not like trading? What is your objective? First, Mike, who's the person, Melissa, who asked?
This is from Anthony.
Anthony. So Anthony, step one is to ask yourself, what is my overarching objective? Now, once you understand the objective, you're going from New York to Florida, you're going to go south. Okay. Then you can ask yourself, am I going to fly? Am I going to drive? Am I going to take a bike? Am I going to walk, take the bus, train, whatever, right? In other words, what time frame works well for you? Once you understand the time frame that works well for you, I'm weekly charts. Therefore, I'm not going to use a 5-day moving average. It just doesn't tickle my fancy. It doesn't work for me. A 5-day moving average is a 1 week moving average on a weekly chart because there's 5 trading days in a week. So, okay, a 2-day moving average doesn't even show up on a weekly chart. So I know other guys that are short-term traders that weekly schmeekly, they're looking at intraday charts and they're crushing. They're doing well. I don't want to say crushing it, but they're doing very well trading intraday charts. That doesn't work for me. So the moving average answer is yes. What I want to, the way that I hold big monster stocks or big leading stocks is by identifying trends as early as possible. Think about this from a bigger picture standpoint. Anybody can chase stocks, right? Stock's up 100%. Oh my God, it's a leading stock. I'm going to buy it. Well, okay, where were you for the last 50, 60, 70, 80, 90%, right? You don't have to wait for the stock to be up 500% to buy it. In fact, I recommend people don't do that. So you have to ask yourself, what is your time frame? And then what is your intended holding period? Mike knows better than anybody else because he's watched me for almost a decade now. I don't like to trade stocks. Confession. I'm not an active trader. I just don't like doing it. I do it, but I don't enjoy the process. I much rather play with the kids, go out and exercise, not really exercise, but walk or enjoy whatever, right? Just read, whatever it is that I enjoy doing. I don't like to actively trade stocks. So what works for me is I've got a weekly system. My guardrails, if you will, I've learned this years ago, back in about 15, 16 years ago, is I need to have, and Melissa, this was your earlier question of how do you protect yourself from when you go off the deep end. I need to have a weekly system that I can follow. So I look at the markets once a week. I learned this from Nicholas Darvis. He was a ballroom dancer. He wrote the book, I Made $2 Million Trading Stocks 40, 50 years ago. And his thing was he was trading before the internet overseas in Asia, he wouldn't get the tick, 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 tick. And he made a killing. He went back to New York, started trading in his broker's office and got crushed. He left. He was at the Plaza Hotel, left, went to Paris and started doing it well again. So he realized when he was away, he was doing great. When he was in the mix, he would just get crushed because he had no rhyme or reason. He had no structure. So for me, I created my own structure. And Anthony, I recommend you and anyone else listening do the same thing. Create your own structure. So Find Leading Stocks is a simple report or newsletter. It's a members area. Anybody can sign up and join. And it's a full disclosure. There's a model portfolio where I give specific entry points and exits. You can see the early entry points. You get in here, you get out there. And on a stop, I want to make sure in a weekly time frame, Anthony, that my stop that I'm picking is enough to show me that the trend that I thought was going to unfold, X, did not unfold. So I want the chart to break. They say the trend is your friend until it ends, right? The trend is broke, it bends but doesn't break. There's all these different things, these adages on Wall Street. You really want to pick your spots. For me, if I'm going to not trade often, which is what I don't want to trade often. Okay, how do I get in as early as possible to a theme, a new big leader, sink my teeth in, and then hold my position? Because I don't want to be stopped out on what Ropel calls wiggles and jiggles. And if I can pick a stop where let me go a little bit further here. If I pick a stop that protects my initial purchase, then I'm golden. So step 1 is capital preservation. Step 2 is capital appreciation. What does that mean in plain English? You buy it, let's say 100. Say, okay, simple numbers here. I'm going to sell it if it goes to 90. So if the stock drops 10%, I'm out. Now you can sell it if it drops 3% or 5%. I've never let it go that far, or very rarely. Usually it's down 3 or 4%, 5%, 6 or 7, and I'm gone. But let's just say for the sake of this illustration, I'm going to say I'm going to buy it at 100. If it goes to 90, I'm blown out. I lose 1% of my portfolio. Just real simple math, right? Okay. Anthony, if the stock, that's my first thing is preserve my capital. If the stock goes up and I now have a profit, my first goal, remember you have to have goals, right? My first objective is to move the stop to break even. Adam, I just don't want to lose money. Call me whatever you want. Call me names and whatever you want. I don't want to lose money. Step 2, once that stock, I moved it to break even, and I'm very quick to move it to break even as long as it's acting fine, or I'm stopped out for a loss. I mean, those are the two scenarios. Either I move it to break even or I'm out and I'm out quick. That's it. Stock, let's say, jumps 20, 30%, whatever the case is, 7 or 8% or whatever. I move to break even. Either it rolls over, I get tagged, which could happen. Prematurely, I'm out and then it goes up. I could either buy it back or just leave it, or it keeps running. The good ones keep running. Then week 2, week 3, I only look at the markets once a week when the markets are closed on Friday after the close. And that's when the report goes out over the weekend when the markets are closed. I don't want to be caught in the tick and tick and tick and tick and tick. So I look at it the following week. What just happened last week? It's 1 bar on a weekly chart. It's not 5,000 ticks. It's 1 bar. Where's my stop and where's the price? Usually the stop's down here, the price is here, hopefully, or up here or wherever. Okay, technically on a chart, uptrends, moving averages, whatever lines you want to draw that makes you comfortable, is my stop at a point, remember I'm buying early before the breakout, is my stop at a point where if it's hit, I'm wrong and the stock needs to be sold? Or is my stop so high that if it's hit, there's nothing, the trend didn't break? I want, if it does break out after I buy it and then the breakout's negated, I don't want to be involved anymore. And that's where my stop goes to break even. But once it's running and there's profits, I want to leave that stop as wide as possible. It works for you, and sometimes it works against you. Zoom was another monster stock I had last year in Find Leading Stocks, and the gain was several 100%. I think it was like 300 or 400%. I can't remember. The stop was so wide that we ended up getting out, I think we gave back almost or right around 100% of profits, but we still walked out with a gain of about 200%, which was in of itself was a huge move. But that's okay for me because I know Wayfair, same thing happened, by the way. We're up, I think, 300 or 400%. We ended up walking out with a gain of 300-ish percentage. I can't remember what the exact number was, but had a huge move down. But that's okay for my risk tolerance because I know that these big monster stocks are going to go down 30, 40%, 25, 30% multiple times in their big multi-year runs. And that's my preference. I want to buy, hold for as long as humanly possible. Does that answer the question?
Yeah, this is great. Oh my God, Anthony, hopefully that gave you a lot of information for your stop losses. And then this is a great way to segue into your services, Adam. This person, John, is new to trading, having some difficulty, understanding the charts and how to understand this. What are ways that your services can help him overcome some of these challenges?
Sure. So great question. The easiest thing, John, you can do is you can go to findleadingstocks.com. We have a coupon code or discount code, save 10% on any level you want. The code is MARA, M-A-R-A. Mike, there you go. Yeah, it's
right there. Right there.
Get what it is, just pause it, rewind it, and it's right there. Just type that in when you check out. There's a consulting service too. If you want to go for 1 year, it's $5,000 a month, and you can get 10% off of that as well, where we'll have weekly calls and we'll dive in deep, and I'll teach you a lot of this, not a lot of everything that we discussed here, but at much greater depths. But also it's interactive, where it's based on your skill set and how fast you go through the program. So that's another option. But either way, once you sign up to Find Leading Stocks and you get in there, understand, you fast forward a year or two. Mike, back when we were doing CYT together, we have members that signed up and we did these webinars 6-7 years ago that are still members today, and that are probably going to be around for decades to come, because that's the intention. So, and there's a lot. So the idea here, John, is be patient with yourself. Understand that trading, like Mike, I love what he says here, by the way, it's not a sprint, it's a marathon, right? Mara Wealth, it's a marathon. You don't have to learn everything day one. Find somebody who you respect, someone you like, someone you get along with. You want to be on the same, my wife calls this, the same frequency as that person. Think of a channel. If you're watching MSNBC, you can get news from the left. You're watching Fox Business or Newsmax, you're getting news from the right. You're watching something else in the middle, you get something else in the middle. Understand that people have frequencies. We all have different chemistry. We all have different channels, whatever you want to, way to explain it, an AM, FM tuner, right? Find somebody you're on the same frequency with and you like them and they speak your language, so to speak, and you relate to them and they're accessible. Pick their brain. Growth Stock Mentor with Ropel, it's a fantastic, Ropel is the best, one of the best traders of our generation. So like Mike mentioned earlier, I've got a podcast. It's called Smart Money Circle. You can Google it and listen to it. And my goal is to learn. So I want to learn from the smartest traders, investors, money managers, CEOs in the world. In order to come on the show, you've got to have 100 million or more in AUM. Ropel loves mentoring people. He was on the show back in April of 2020. We kept in touch. We hit it off. We were on the same frequency. I said, hey, listen, I'm doing this with Gary. I'm doing this with a few other people. I do it for myself. I've been doing this for 20 years, helping people, educate them about the market, learn, so on and so forth. Would you like to share your expertise and mentor these people? So he's like, yeah, I mentor caddies all the time when I go golfing. I said, great. You want to mentor thousands of people? He goes, yeah. And that was that. So find the mentor that works for you. Mike's available. I've 10 stars out of 5. I strongly recommend everybody, again, unsolicited plug here, but recommend Mike's services. It's fantastic. And once, John, you're in a situation where you give yourself the time, learn, read the books. You can go on John Boyd, who wrote Monster Stocks. Fantastic wealth of knowledge. And I want to package his stuff and make it all accessible, because he's got, just go on his Twitter, it's free, and you can see all of the great books he shares. You can go read Market Wizards by Jack Schwager. You can all go on and on and on, but give yourself the time, find coaches or find a coach that works for you, and believe in yourself. Understand it's a marathon. It's not about catching one big stock. It doesn't matter. You have to have rules in place. You have to have a structure, whether it's Amped or it's Canslim or it's LMNOP or it's whatever you want. Figure out an approach that works for you, that you can apply cycle after cycle, that you respect risk. When you're wrong small. When you're right big. And you remember what Howard Marks talks about. You've got probabilities and you've got outcomes. That's what it comes down to. Anything else, you just go too far in the weeds. And the other the other thing is simplify. Always simplify. The only thing a stock can do after you buy it, or the market can do, it doesn't matter if you're trading gold, if you're trading Bitcoin, if you're trading the S&P 500, the NASDAQ, Apple, Tesla, NEO, it doesn't matter. It can go up It can go down, and ready for this one? It can go sideways. Have a plan for each one of those scenarios. What are you going to do if the stock goes down after you buy it? It's not rocket science, ladies and gentlemen. You know, Buffett talks about this. You want to be fearful when others are greedy and greedy when others are fearful. What does that mean in plain English? You buy it at 10, let's say it goes to 9. Most people are hoping and praying that it's going to go back to 10 to get back at break even. If I just get it back to break even, I'm going to sell it. They're what? They're hoping that it goes back to break. He says, be fearful it's going much lower. And then conversely, when you buy it at 10, it goes to 10.50 or 11. You go, oh my God, I got to sell. I'm scared that I'm going to lose my profits. Instead, there, be greedy and let it go up more. So that's just, again, just switching, reprogramming, rewiring the brain is such a huge piece of this investment process because it's counterintuitive in nature.
Oh, this is great, Adam. Thank you so much for sharing. I'm going to throw it back over to Mike now.
Yeah, there's so much that we could unpack here. Like, I can't wait to go back and rewatch the replay and like draw up all the highlights that we're going to put at the end of this. Like, it's dude, like, thank you so much for being here and taking the time to be with us today.
It's always a pleasure, Mike. Melissa, thank you very much for being here. And it's a pleasure finally virtually meeting you. Hopefully we'll see each other in person soon.
Same here.
And, thank you everybody for listening. And Mike, thank you again. We'll talk again soon.
Yes, absolutely. Everybody go check out findleadingstocks.com. Check out growthstockmentor.com. What else? What other spots can we find you, Adam?
That's good. I mean, Twitter, if you want to go deeper, I'm very accessible. If you sign up to findleadingstocks.com, I interact with everybody that wants to interact. You can email me directly. I'll write back to you, Mike. You know, the emails are pretty much on point. So part of the membership is you get free access to me. You can ask me any questions you want. Ropal, you sign up to Growth Stock Mentor. You email us there at info@growthstockmentor. Once you sign up, we'll ask Jim the questions live on air. The next live event, by the way, with Growth Stock Mentor is happening tonight. So
oh, wow.
Yeah, you can sign. It just happened to be back to back today. So you can, and there's all of them are on demand that you can go back and listen to Jim, and we go back and forth. And we've got members that ask Jim questions. We've got a bunch of questions for tonight, and there's a live Q&A as well. So the info's out there. If they want to interact, just reach out, and it's that simple.
Thanks so much, brother. Really appreciate you being here.
Likewise.
Thank you, everybody, for joining us. Thank you, Melissa, for everything, for mounting the Q&A, and for being an awesome co-host.
You're welcome.
All right. Take care, everybody.
Bye.
Much love. Peace out. Wow, that was incredible, wasn't it?
Oh my God, Adam has so much passion for the stock market. I love, especially for the key highlights that I got out of it was that anybody can play, anybody can compete, and anybody can win, and that there's an infinite number of ways that you could make money in the stock market. Just have to find the right one that works for you.
Yeah, all that is true. Like that's one of the great things about the stock market. It's one of those things that's completely accessible to anybody, but you do have to put in the work to figure out, well, what is the way that's going to work for me? And that goes back to all of our goals and beliefs, and then trying to find that method that's going to best suit us and where we're at in our lives. And that's a moving target too.
Absolutely. So what did you get out of it?
I got a couple of things out of it. Number one, perseverance and learning from your mistakes. That's such an important thing for all traders to be able to do, and I think that's something that's ongoing. The other thing that I got out of it, that secret sauce of finding the leading stocks. Like, it's so simple to just look at what stocks up, like year to date and over the past year, and filter it, which ones are up the most, right? And those are your leaders, and if you want to look for stocks that are constructing a base pattern, setting up again, aim for those, because those are the leaders, and that's a key way to find new leadership.
No, I love it. And I think for me, I also got out of it the example he gave about the two people. The one person who has the map trying to get out of New York and has their destination versus the person on the top of the Empire State Building screaming, oh, I'm going to get out of New York, but has no plan, no roadmap. So who do you think is going to get there faster? And I think that is great, that we need to make sure you do have a map of some sort, a guide to help you get there and to reach those trading goals. For the full list of the top 10 key highlights from our interview with Adam Sarhan, be sure to check the description of however you are consuming this right now, and be sure to check us out next time.
Yes, and we hope that this gave you the jumpstart that you needed. Now take it and run with it.
Bye.
Take care, everybody.